So we start today's market review, a quick one because I need to sleep. I have a class tomorrow. I'm not happy about it, but oh well. Life of a student in architecture anyways. Yeah, so let's talk about today's move. Making sure everything is well set on each of the candles charts that I need it on. Yeah, now we're good. So I start here. So today I like to open my market. Once this candle closes, we have here the 5 AM candle closing on the fall. But yeah, we had this sweep, which is on to show it really well. It was a previous day low here, as you can see. Previous day's low, probably a data low because it was a 9. I'm a 5, 9. Okay, anyways, but yeah, we had a low here, and then we had swept it at this candle's low, and it's in a push up from it. So I was kind of wary of possibility of being bullish, but on EU, we were forming equal lows with that low. We had not taken it out on EU, sorry. Yeah, EU, we hadn't taken out the lows. You can see this low. Yeah, first to scroll back, you'd see it here. This low here, we are not taking out these lows. So on my professional analysis, I was looking at price action saying we could continue going low for EU. It's a possibility. And then we go to DXY. We had these highs here. These highs, as you can see, when we were looking at that hour, price was price was here. This is 7 AM, so around here. Anyways, yeah, price had not just closed above. We had just closed this candle and closed bullishly. So I was like, okay, we could either retrace into this fair value gap and see pushing up, or you could just keep shooting higher. So that was my theory. So I was like, okay, I'm looking at the EU, GEU, that is Confluence, the SMTs and all of that with GU, and I'm looking at DXY because it has USD here. And I was looking like, okay, DXY looks very bullish, while GU may look bearish or weak bearishness. There are times in the market where GU sometimes may look like this, and when DXY is showing bullishness, you would expect us to keep continuing going long on GU, just because DXY, just because GU may look like this doesn't mean that DXY doesn't mean that it's bearish or it's bullish or it's switched. DXY always gives the idea as to what price is going to do. So seeing how price was pushing here and the way we closed above, I was uncertain that either we'd come back down, manipulate, and then distribute. So I waited, right? So let's drop to the 1 hour. So let's look at it as soon as the 9 AM candle closed, that offered now the trade. Right here, 9 AM closed like this, while here 9 AM closed here. So what did I say? Once 9 AM closed, I was like, 9 AM has closed, correct? And it closed below this and below this low. So it was certainty of continuation to the downside. My idea was either 10 o'clock could open, maybe take us into here or somewhere around here, and then see a retracement, or wait, what? Retracement up into here, and then take us low. And here, since 9 o'clock closed like this, and since we had these equal lows, I was quite certain that we'll keep pushing low on EU. Because looking at this and the way it's moving and slowly retracing and failure to close bullishly, it was like it was a weak up move. Usually we'll see stuff like this without momentum to upside, price is bearish. And when you see whenever price is trying to go up and it can't, it will always dump. And when price is trying to go down but it can't, it will go up, as you can see, right? correct. So look at EUGU, seeing the way we push down, can close at 9. I was certain we would continue lower, because usually 9 o'clock is my answering clock. Let's put it that way. It helps me see, in other words. Yeah, so you can see how this weakness is showing. We're likely to keep going lower, but anyways, yeah. So I'll look at this 9 o'clock and saying we can start seeing low prices. So now let's go now to the 15, where now the market decided to play for us. So we had the 9 o'clock closing here, and 10 o'clock opens bearishly, dumps to the downside, right? Yeah, so it dumps down to the downside. Now with this big dump, I was certain we'd keep going lower. So I was like, we may have missed a trade. So I was like, it's unfortunate. And here on the 15, the same thing happened. We had a big dump to the downside from relatively equal lows here. So I was like, okay, we may start seeing lower prices, and price may dump without any form of retracement. So I was like, I may have missed the trade. So I was like, okay, let's just watch and see if a trade does appear. So I opened my 5-minute candles to see where price could retrace to. So we dump like this, 9, then 10 opens with a big dump, pushes down again, and then get a retracement up. So what did I see? From here, the last half candle, and then down, what did we hit? We hit the equilibrium of this move, of this range, and we retraced it back up to it. And at the same time, we hit the consequent accordant of the fair value gap to the tick. Okay, not to the tick, but almost to the tick. Like, we left such a small space. So I was like, okay, this is showing bearish reactions, right? So I came back down to the 3-minute, and no, actually to the 1. It's kind of like a 1-minute entry, yeah. And is there any SMT? I didn't really focus much on this. Oh, there was SMT. Hey. Oh, actually there was no SMT, sorry, but yeah. Small SMT here, but either way. Yeah, so I was looking at it and seeing that we were failing to take top to this, and we're failing to break through the 5-minute value gap consequent recruitment. I was like, okay, fair. I'm seeing bearishness, so I dropped to the 1 minute, and I was like, 1 minute right here. Sorry, let me move this away, because now it's not important anymore. We had this gap here. As you can see, I had drawn it out. I'd drawn out the gap right there, and the moment we closed right here, I took the trade, because I was looking at this inversion here and seeing if we were to inverse it on the 1 minute, as we did here, I would take the short, and we inversed it with momentum. So I was like, okay, this is very bearish. So I started. Stops were above there. Actually, my stops were above the candle that formed the fair value gap. Yeah, right here initially. Targeting one is to 20, just got targeting my usual 20 pip trade, which got hit in like an hour. Yeah, 30 minutes actually, but yeah, trading from here 920 to 955, 950. Yeah, eventually my stops finally landed here as the trade ended. But yeah, barely any drawdown, an immediate push to the downside the moment I walked into the trade. And the drawdown I had was usual drawdown from what's it called, spread. Yeah, but otherwise trade played out quite well. And I'm quite proud of the trade. It was slow. It was quite slow actually. I mean, let me show you where it stressed me out especially the most was certain plays like this where we started going down, then we get close, and then we started reversing. Small reversals like this stressed me out for no reason. But yeah, it was useless stressing out from there, which I didn't really need to experience because price could continue low. Yeah, and one thing you need to learn as a trader is that your stop is there to protect you. Yes, you want to make money as a trader. Every trader wants to make money. You want to make money, that's true. And obviously, as much as taking a loss should not affect you, it does. It makes you feel bad. You shouldn't take the trade. You shouldn't take the loss, obviously. But yeah, you would want to make money every single day. It's the life of a gambler, either way. As trading is kind of like gambling, but yeah, you would want to make money, but you can't always make money, so you need to accept that you lose. Some days you will get close to your TP and then lose. That happened to me twice last week actually. Got close to my TP and lost. It was okay. I'm back today, still up. Can't start in drawdown. What does that mean? It means that even if you miss a trade last week, all the trades last week, you will still come back with time and you will get back what you missed and you make more. Just 1 day, maybe 2 days, 3 days. Small retracements like this should not affect you. You should allow them because you have so much thing backing you up. As you can see, Dixie did end up eventually hitting my final target up there. Small retracements like this, they should not stop you from the trade. You see, it's such a big pushback to the upside when you had this move up. Yes, it was scary. It was quite scary actually when I saw price pushing up like that. Actually, I thought price, the down move was done. Just moved back up and then continued low, direct push down to the downside again. As you could see, barely any more retracement actually. After that, it was straight down. Now what does that mean? Is that the moment price has a target, has a liquidity to hit, it will go there no matter what. It will go there, and you can see, I don't know what the final target is on the daily, but we hit something and that's why we stopped. But my final target in my assumption is we may hit this and we may hit that. I look at it on a weekly bias, it's quite of a big down to the move to the downside actually. But last week I was so weird that it was almost the same type of two candles for the past 2 weeks. But yeah, one thing you need to allow yourself is to accept retracements, because no matter what happens in a retracement, the trade is still a good trade. No matter any retracement, you are still a good trader. When you get stopped out, you're a good trader because I was able to recognize the move for the day, and that is something that you should be proud of, recognizing the move for the day. Another thing you should be proud of is capitalizing on such a move, because being able to know when to enter the trade is a great thing too. Seeing respects of fair value gaps, respects of TP, respect of order block, respect of breakers, respect of all these things. Those are things that you notice and then you take trades, you take advantage of those positions. Small moves like this can make you double what you're risking. Moves like that, so much more, you know. Yeah, that's all you need to do. That's all you need to learn how to do, is to triple your investments. You know, you trade and make more. You can just trade like that and you make more. I don't believe in R&R because this is like a 1:3. I don't really care much about it. 1:3, 1:8, I don't care much about those things, because no matter what happens, a trade is a trade. But yeah, that's my trade for the day. Thank you.